Hi there, welcome to Kneppy Invest and welcome to the 18th of August 2025. Time is currently 2:35 p.m. It's about an hour and 34 minutes left of trading today. And how many times have we seen the share price of a company rise almost 2,000% in one day? Yes, almost 2,000% in one day. I'm so excited, even though I don't own any shares in this company. Kaili Resources share price up 1,844.44% as I speak at 2:36 p.m. Now, more than likely, share price. Well, there we go. It's almost at 2,000%. Share price keeps on going up. I'm not sure who would be crazy enough to get in right now. The share price is up that much on no news, but people just keep on buying. And I'd say day traders are in this, but there's just no selling. There is no selling at this point in time. 90 buyers and 5 sellers, but eventually we're going to see some selling. But who would be crazy enough to buy some? There we go, over 2,000%. I have never seen this before. I can't think of any time this has happened before. Share price of a company up over 2,000%. In fact, when I see a share price of a company up 200% in one day, I get excited. Not 2,000%. This is amazing. Now, the company did release something last Friday, and the share price actually did bounce a fair bit, but the share price opened at 4 cents this morning, 4.1 cents to be exact. And just imagine if you bought some shares and opened this morning, and you might have been umming and ahhing because that was 10% higher than where the share price closed on Friday. You could have been umming and ahhing, and then you thought, I'll just go away for the rest of the day just to see what happens because I just can't handle it. And then you come back at 2:37 p.m. You see share price up 2,000%. Wowzers! Imagine you've put $10,000 in it. You're up. You've up. You've gone from $10,000 to $200,000 in one day. Anyway, so this doesn't happen all that often. That is why I'm just talking about it. I just can't stop talking about it. It's astonishing. Anyway, so we'll talk about Kaili Resources later in the video. It's not in my top 5 stocks, and there's a reason behind that. But this is really the story of the day because it doesn't happen all that often. And by the way, it looks like it's in a. I was going to say it's in a trading halt, but it's not because they've got the indicated price there. And yeah, based off this, it's in a trading halt. Yeah. So it looks like it's in another trading halt for some reason. They've already been in a trading halt. They did get a price query from the ASX. They've answered that. They're back to trading. And we know they've been trading because we saw the share price change as I spoke. Yeah, the last trade was at 2:36 p.m. Anyway, so this is just, this actually could be possibly a symptom that there is a bit too much froth in the market right now. It could be, or maybe just a bit too much froth in rare earths. And there's a reason I say that. And we'll have a look at the announcement the company released last Friday. Okay, otherwise, it's been a fairly quiet day in the market. A little bit of positive action, although it did start down on open. When I say we or it, I'm talking about the XJO. A slightly negative day for small caps, positive day for all tech, and a negative day for mining. And I haven't even mentioned the agenda for today's video. Well, it's exactly the same as all others. So we'll have a look at the ASX today. Then we'll go to the top 5 stocks, and it's full of companies that release results. Yes, every single company in the top 5 release results. Then we'll have a look at the chart of the day. Interesting company. Forget the Aurum or something like that. Ticker code AUE. And that'll be it for today. I've already recorded 3 banked videos today, fairly short, but 3 banked videos to be released sometime in September and or October. Okay, so back to the ASX today. And yeah, nothing much to say. Best performing sectors, telecommunications, maybe Telstra's had a good day, don't know. Real estate, staples, IT and financials all up by over 4%, and a fairly negative day for materials and energy. Apart from Kaili Energy, well, that's up to over 2,000%. Why is telecommunications up? 1% higher. Is it just Telstra? Because Telstra is by far the biggest company in this sector. Telstra is up, but REA Group. Okay, so REA Group does have a new CEO. So it looks like the market has said, hey, we like this announcement or this hiring, whatever you want to call it. And what's his name? Oh, I did read it. I was going to say Mr. Cameron, but that's his first name. Cameron McIntyre, appointed CEO of REA Group. So that's actually good. That's good to see the positive market reaction. So obviously the market has looked at this and went, great. I actually had a look at REA Group's results last night. I might do a standalone video on it because I was really interested in their margins. And that's the only reason I'll probably record a standalone video is just because of the company's margins. And it's not good reasons, it's actually slightly negative. Okay, so that's why REA Group's up and why telecommunications have had a pretty good day. Although every other single company in this sector has had a pretty good day. Okay, that's fine. What else do we have here? There's nothing else. Banks have had a good day. ASX 20 is up 0.14%, probably driven higher by the banks. I'm assuming iron ore's had a bad day, gold's had a bad day. So let's have a look at the ASX 20. Banks good, iron ore bad, and that's 7 or 8 other companies in the ASX 20. That is why I do talk a lot about the banks and iron ore when it comes to the ASX 20, because it's just too much concentration in the ASX 20. So let's see if that is true, particularly in the top 10. In fact, I would say in the top 10, this is my market cap, bank, iron ore, healthcare, bank, Wesfarmers, bank, Goodman Group, Fortescue. So that's not quite, is it the top 10? Yeah. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So in the top 10, we have 2 iron ores, and was that 5 or 6 banks? And the other iron ore is about 15. So yeah, anyway. So having a look at this, yeah, the banks are up. CBA, Westpac, NAB's up, ANZ's down. That's interesting. NAB did release an update. I thought it was slightly negative, but the market disagrees. So market thinks it's slightly positive. I thought it was slightly negative. No growth or anything in that bank. And end of the day for iron ore, BHP down, Fortescue down, and there you go. I thought Goodman Group would be up, but it's down. That's interesting because real estate was up. Okay, now on to the top 5 stocks. No, now on to the top gainers and top losers. Getting ahead of myself yet again. I just want to have a quick look at Kaili Resources because I'll be talking about this company in a second. I just want to say, 2000 up 2,316%. I don't know why it was. I don't know why it was not trading earlier. But it's back to trading. In fact, the next trade, the share price will be even higher. There we go. Would you be selling it right now? Oh, I just think this is insane. People are just buying it. Is this FOMO? Is this FOMO? When the share price of a company is up 2,300% on no news, is it FOMO that people just keep on buying? But why is there no one selling? Okay, so let's have a look at the top gainers today. And of course, at the top of this list is Kaili Resources. Well, according to Market Index, share price is only up 1,000%. Now, this was 20 minutes ago. So this was at 2:23 p.m. So we're talking about 20 minutes ago. So has the share price of this company doubled in the last 20 minutes? And we can have a look at the course of stuff. There it is, up 2,400%. It just keeps on rising. And if we go back to 2:23, yeah, the share price had just, was at 50 cents at that point. I'm just going to reload this. So this is a bit out of date, I think. There we go. Starting to rise. So in the last 20 minutes, the share price of this company has risen has doubled from 40 odd cents to 80 cents. And it just keeps on rising. It's astonishing. I've never seen this before. That's why I just keep on talking about it. Now, APM Animal Health, there's a takeover bid for that company. And nothing else I really want to discuss because I was just so fixated on this other company. Rocket DNA did release something which I'm just trying to remember what they released. I do remember the company releasing something. And what was it? Oh, secures 3-year contract at Gruyere Gold Mine. There you go. Okay, so let's have a look at this company called Kaili, or whatever it is. Kaili Resource share price now up 2,538%. Or I just can't. And look at that. The next trade, the share price will be higher. We know because someone just came in and went, I have to buy shares, 12,000 shares at 96.5 cents. That person could lose a lot of money. There's a chance the share price could drop 60% in one day. I'm just going to say, this reminds me of some of those meme stocks on the NASDAQ or New York Stock Exchange. So, but there you go. Share price is at $1. Okay, so the company did release an announcement last Friday at 2:48 p.m. Received approval for REA drilling in South Australia. Oh, whoopie-doo! Received approval for just drilling. That's it, just drilling for rare earths. Sure, it's rare earths. There's a little bit of excitement in this space, but this is just approval for drilling. This is a story stock. And I'm just shocked that this has received so much attention. But I think a lot of this is just day traders getting a little bit overexcited, that sort of thing. But it's just approval for drilling. Now, the share price did increase, was it 500%? I actually did miss this. Actually, I wouldn't have missed this because this did happen quite late. But it went up 500%. So share price went from 6 cents to 3.6 cents. So you can just see it started at 6.6 cents. Now, look at the trading. Look at the history, 4 days of trading in the last few months. So this company was highly illiquidly traded. I don't know if we go back. So this company has been listed for that time. So very little trading we've seen in this company. And sometimes you'll see that because if a company is illiquidly traded, a lot of the holders just are hanging on tight. They won't sell. And what has really led to this significant increase in share price starting on Friday was someone saw this announcement and just were buying on market. They were just buying on market. There was probably not many shares on market. And that just pushed up the share price because they were just a little bit too enthusiastic. There was no sellers, and we're just seeing there's still no sellers. That little bit of enthusiasm set the share price up 500% in like an hour of trading. And that has continued into today. So this is what can happen when a company is illiquidly traded. You can see this sort of thing happening, this overreaction. I'm going to say it is an overreaction. Now, there is a benefit of this. This does lead to a significant increase in liquidity, and it will for Kaili Resources over the next, who knows, next few days, next few weeks. And I would be shocked if we don't see significant volatility in this company's share price. You can see the share price drop 50% in a day or rise another 200% in a day moving forward. It's going to go back to, share price. It's moving towards being up 3,000%. I could spend this whole video just looking at this. And you can see there's still no sellers. There's just no sellers. No one. Just no one wanting to sell. Even traders. I don't think the J traders. They're just thinking, not yet, not yet. But when the selling does come, it could come in a rush. Because I would say a lot of day traders are in this. This is how they make their money. So an absolutely fascinating day. And I just could spend all day on this. I could spend all day on this. Someone just went, I've just got to buy 500 shares at $1.08. I just got to do it. Just got to do it. Okay, we'll come back to this in a second. Well, we'll come back to this in the rest of the video because this is going to be the title. This is wow. Okay, top gainers by market cap. Liontown Resources, Clarity, Bravura, nothing much. Metallium, Fiducian is in my top 5 stocks. In fact, I'm going to say a lot of the rest of the top 5 are negative. And funny enough, Fiducian, which is a company I own, I saw their results and I went, 2 thumbs up, absolutely thumbs up. But I didn't think the share price would rally this amount because the share price has risen a fair bit over the last few months, 3 months, 6 months or so. And I was thinking, look, I don't think there's as much value in this company as there was like a year ago. So a little bit surprised the share price is rallying, but the results were fantastic. I'll talk about that company in a second. Another pretty good day for DGL. So Ben Hutchison is very happy, unless he sold, and then he's not happy. Okay, and Bhagwan Marine. Okay, top losers. What do we have here? And of course, I'm going to just say something here. Why do we prefer to be long? Why is riding your winners much more preferable to selling your losers? Because can a share price decrease 1,275%? No, it's an impossibility. Share price of a company can't decrease more than 100%. But a share price of a company can increase 5 billion%, 5 quadrillion%. So there's no end to the limit of how much a share price can rise, which is why just riding your winners as long as possible is so beneficial because you can get massive returns, but just maintaining your losers, the maximum you can lose is 100%. So that is also a reason why there is some investing strategies out there who they don't care about their losing stocks. They just just keep them in the background, but they really want to hold those winners. And their percentage success rate could be 20 to 30%. But those winning stocks could be up 10,000%, 20,000% over a few years. And that is how they make their returns. So that is, I'm pretty sure that's the strategy of the Motley Fool guy in the United States. Buy a group of companies, and a few are really successful and the rest are not. And I'm pretty sure research has shown that if you have a fairly big portfolio, what you'll find over time is the vast majority of your returns is because of few companies. That's it. Okay, so let's go back to the losers because, anyway. Highfield Resources down 44.9%. I'm not sure which company, Audinate Group is a stock of the day. I'm not sure which company I will speak about here. Oh, AML 3D did release results today. I'm not sure why the market's selling off, because when this type of company releases results or half-year full results, I don't really pay attention to it. For me, these sort of companies, it's all about the quarterly. It's all about the Appendix 4C. But the company did release results, and obviously someone went, oh, I don't like the results, I've got to sell. Share price down 11%. But that's not the company I want to talk about. Oh, there's Digico Infrastructure down 10.6%. Also in the top 5. Highfield Resources, share price down 44.9%. Why not? Market cap is 64 million. So the market cap was about $100 million before this announcement. They did release something negative. Yeah, so why not look at this one? Okay, this was about finances, I think. Update on proposed strategic investment, or sort of, in that ballpark. And this was negative. This was the other party went, nah, we're going away. So China Minmetals Corporation and its subsidiary Jinghai Salt Lake Industry have informed the company of the decision not to proceed with the proposed strategic transaction contemplated under the non-binding letter of intent, details of which were announced on the 13th of May, 4th of July, and 18th of July. Highfield confirms the decision means that the convertible notes issued by the company to Potash Investments and whatever, and others have matured. That's really complicated there. And others have matured. So the convertible notes have matured. And they're engaging constructively with Highfield EMRR on future options. Does that mean there's a lot of risk now in this company? Yes, I suppose that does. Whenever you see that those words, engaging constructively with the company on future options, that for me means increased risk. And there's, without doubt, there's increased risk. So that's why the share price is down for Highfield. And this could be like the first time I've ever looked at this company, maybe. I don't know. Let's have a look at the chart. Well, not the weekly chart. We'll go to the daily chart. And interesting enough, the share price. Oh, look at that's interesting. Share price before today went on a really nice little run, and then the share price has gone back to where it started. So why did the share price go on a run? In fact, it was up 31%, 23%, and 4% in consecutive days. That's a little bit dodgy. But in saying that, share price has been a downtrend for a while. No, that's a weekly chart. Sorry, that's a weekly chart. I was going to say, now even then, if you have a look at the daily chart, share price has gone on a run and looked like it was breaking out, and then all of a sudden this negative stuff comes in today. But even on the daily chart, it's in a downtrend. It's been a downtrend for ages. Okay. Now onto the top 5 stocks of the day. First of all, we're going to have a quick look at Kaili Resources. Share price now up 3,372%. And it's just not stopping. Look at that. Look at the sellers. 2 sellers. 87 buyers and 2 sellers, and share price just keeps on going up. In fact, we could have bought this when I started speaking. What was the share price then? Was that 80, 90 cents? So 88 cents, I think. We could have made, like 30%, 30, 40% return as I was speaking in how long? 20 minutes. Wowzers. This is insane. I'm just going to keep that open. Okay, down to the top 5 stocks, which means I have to open up another tab. And coming in at number 5, we have Aurizon Holdings. Okay, so share price is up 1.7%. So you might be saying, why am I talking about Aurizon? Okay, so the contenders for the top 5 stocks of the day, who also released results, including Freightway, not really, A2 Milk was in contention, and share price is up a little bit. NAB, Blue Scope, which did not quite make it, down 3.94%. Lend-Lease, I thought this was okay, up 5%. Ampol, flat. GWA Group, flat. And, Frontier Digital Ventures, they're in a trading halt because of some dodgy stuff happening at one of their Colombian subsidiaries. So those are some of the contenders. But why Aurizon? Why indeed? And the main reason, I'm trading this one, and the main reason I did find something positive in here. Now, I do joke sometimes when if you have a look at the presentation, and this happened with Ampol as well, and this was a joke I made in 2016. So if I was recording this channel back then, I would have made this joke when it came to mining companies. And when they released results, the first thing they mentioned was safety. Oh, we had a really good year when it comes to safety. Just forget about it, financials. We had a really good year when it comes to safety. And I made the joke that when mining companies mention safety first, usually it's been a bad year or a bad period. And I saw this with Ampol. They just mentioned safety first, and then before they went into financials. And then I saw it with Aurizon. I went, ooh, these results are not good. So have a look. So they just talk about the company itself, overview, and then safety. Straight away into safety before even talking about financials. And for me, that means, okay, that means the numbers are not good. The numbers are not good. But in saying that, I think this was expected. And when I say not good, everything's down. So underlying EBITDA down, profit down, free cash flow down, full year dividends down, return on invested capital down, capital management on market buyback up, I suppose. So everything was down, but this could have been expected. So I was just going through this because I am trading and I was like, okay, how's the market going to react? Is it going to be negative? And then I saw something quite positive. And I really think the company should have led with this. Now, I've got to find it now. I don't mind stuff like capital allocation framework. I love when management talk about capital allocation because, in my opinion, this is their most important job. What do we do with the profit and cash flow? What do we do? Dividends, share buybacks, acquisitions. So this is very important, in my opinion. Talk about coal markets, bulk markets. And I know it's somewhere here because I read it. Oh, and maybe it's not in their presentation, which would shock me if it's not in their presentation because it should be. In fact, I said this should be the first thing they mention. So where did I read it? Maybe it was in the media release. Or maybe I just dreamed it. Maybe I just daydreamed it. Now, here it is. This is it. The outlook. This is, in my opinion, this is the most, it's equal the most important part of a financial release, like the full year results, any sort of trading update or outlook. And this can really drive the share price up or down if it's positive or negative. Now, the other important thing about financial results is how close were they to expectations. I'm not sure which one's more important. I would think maybe outlook or trading update is just as important because the market wants to be forward-looking and the outlook and trading update is a more of a forward-looking thing. Anyway, so I always try to have a look at any sort of outlook. And when I saw this, I was like, hey, wait there. This should be positive. This should be positive. And the reason I say that is they have an outlook for EBITDA between 1,680 million to 1,750 and dividends of 19 to 20 cents. So if we compare that to this year, so EBITDA was 1,576. Oh, that's nice growth. And dividends this year were 15.7. Wait on, that's actually pretty nice growth. So a pretty bad year. Now they're expecting a pretty good year. And for a company that has been struggling and a chart that's been struggling, I was thinking and hoping that maybe the market would pay attention to this and go, hey, now it's time to be buying Aurizon because back to a little bit of growth and maybe bottom of the cycle, maybe. So that's why I was a little bit excited about these results. And I'm happy to see the share price is up. Share price actually was down just on open. So that shows you initially the market didn't like it. Then maybe the analysis had come in and said, hey, there is something to like about these results, and it's the outlook. Okay, so let's have a look at the chart for Aurizon. So let's just have a look to see if we're starting to see some positive sentiment coming in and the trend. We'll just pay attention to the daily chart. So the reason I initially got excited with this one is I did put a downtrend line here, and that downtrend line broke in early July, so just over a month and a half ago. There was a nice little pullback, and I like this pullback. So this is when I was buying it, on this little pullback. I think now's the time to buy, on the pullback. So share price now up a fair bit after that pullback, and the share price today get to 335, which is a long-term high for Aurizon. So just by looking at this chart, this is exactly what I'm looking for. So it looks like there has been a shift in sentiment, shift in the trend, the share price, and now we've got something to back it up. A nice little outlook from the company. So that's Aurizon coming in number 5. The only reason it's not high is because the share price reaction or the market reaction hasn't been as extreme as the other 4 companies. Okay, so let's go into company coming in number 4. And before that, you know what? Wow, 4,150%. That's insanity. And there's still no buyers. When I say no buyers, 3 buyers. And we know the next trade is going to be higher again because we have 2 buyers just coming. This is very important. And I think I've mentioned this a few times. It's all, people have said to me before, there's always, when it comes to buying, selling, there's always 2 sides of the party. There's always buyers and a seller. So I don't understand what you mean when there's buying and selling. It's all about the enthusiasm. And this should show it perfectly. Buyers are really enthusiastic right now about this company. So what they do is they put in orders. They either buy on market, so they buy at $1.79. But what they do is, if they see, the sellers at $1.79, what they do is they put their buy bids in above where the share price is. So we have 2, or actually 4 people who have put their buy bids in above where the share price is, and that's showing that they have enthusiasm. And right now, I think that's one of the reasons why there's just no selling. Because people see this happening and go, well, there's no point in me selling because the buyers are really enthusiastic. But that's going to change eventually. But when is it going to change? I have no idea. So look at that. So share price is $1.53. We have buyers at $1.54, $1.55, $1.60, $1.61, $1.62. Buyers are so enthusiastic. And eventually that will change, but when's it going to change? And we have a few more sellers coming in. There's just insanity. There's just no selling. There's no enthusiasm from the sellers. And I think the reason behind that is lack of liquidity. The original holders of this company just don't want to sell, didn't want to sell. I'm not sure why they're not selling now, though. Wow. Oh, geez. Ooh, wow. Okay, coming in number 4, we have Digico Infrastructure REIT. First time I've ever looked at this company, or this REIT. Now, I assumed, even though it's a REIT, and I think most REITs, if not all REITs, have distribution or a dividend, I just assumed this company wouldn't because they're building out the infrastructure. So I don't know if I truly understand what this company does. As I went through the presentation, I thought what they do is they own the property and everything within the infrastructure. So and they have to build out the infrastructure, buy more land to build out the digital, the data centers, not the digital, the data centers. But it seems like they do have a dividend, which I thought was really interesting. So I went through their presentation. First time I've ever looked at this company, and the share price has been under pressure recently. Now, what was really interesting about this is they do have a valuation of their property, and it's significantly higher than the valuation of the company right now. So they must have a fair bit of debt. Now, wait there. I think it was the NAV, which is a net asset value. That was significantly bigger than the market cap. So that's just the market cap, not enterprise value. So, yeah, excuse me. I think you have to look at the enterprise value. No, anyway. Anyway, I'm confusing myself. Okay, so first time I looked at this company, so I didn't know they were in data centers. I was thinking maybe they're more than data centers. So Digico, like digital company infrastructure. I thought they were in more data centers, but they just talk about data centers in this particular announcement. And they're actually fairly diverse. And what I mean by diverse is, like here, by the way, here, so prospectus, their analyzed EBITDA was ahead of prospectus, and dividend, I'm pretty sure that was dividend per share of 10.9 cents per security. That was a bit of a shock to me. I just assumed this company wouldn't have a dividend, just because it would sort of suppress their growth moving forward. Anyway, I also like to have a look at their infrastructure where they have all these data centers, because this is the first time I looked at this company. Just talking about data center demand drivers. I like this as well, this sort of page, because I spent about 3 or 4 minutes on this. And like the 4 little segments here, like hyperscale cloud, enterprise and government digital transformation, edge computing and carriers, and artificial intelligence, and how much deployment is needed here. And some of the customers, which could be important here. For instance, in the enterprise and government digital transformation, it's the big mature companies or organizations in Australia like CBA, Woolworths. And outside of that, in hyperscale cloud, artificial intelligence, it's the growth companies. Even in edge computing carriers, it's the growth companies. Anyway, found that interesting. What else? Oh, portfolio. This is what I wanted to see. Portfolio update. Number of properties. North America, 5. Australia, 8. Independent valuation, $4 billion. The rest of this I don't care. But what I found really intriguing here, Australia, 8 properties with over 550 customers. North America, 5 properties, 2 customers. Ooh, highly concentrated. 2 customers. And I'm wondering what those 2 customers are. Is it, if we go back here, because I didn't mention who the customers were. Where is that? Is it AWS, Amazon, what's it called? Amazon Web Services, Google Cloud, Microsoft Azure? Is that the big customers? Is it CoreWeave, Terra, Lambda? I don't know. Cloudflare, Oracle? I don't know. Anyway, so I found that really intriguing. If I can find it here. Did I go past it? I think I did. Yeah, so 2 customers in 5 properties in North America, and those 2 customers account for 49.3% of the gross income. Yes, 49.3% of the gross income for this particular REIT. So those 2 companies. Sometimes I don't like that sort of concentration, and the biggest customer by gross income in Australia is at 5.6%. So that's 2. So I'm not sure what I think about that sort of concentration. Now, here is their geographical breakdown of their portfolio. So a lot in Brisbane, which surprised me a little bit. 1 in Sydney, so 4 in Brisbane, 1 in Sydney, Townsville, 2 in LA, nothing in Melbourne, nothing in Hobart, Perth, Darwin, Alice Springs, or Birdsville. Surprised about Birdsville because I thought Birdsville would be a growth area, but maybe that's just me. But in the United States was interesting. So Chicago, Kansas City, Dallas, Fort Worth, and they're building stuff in Los Angeles. LAX1 and LAX2. Okay, then they go through revenue mix by income, etc., etc. Okay, financial results. They're not profitable. So they are underlying EBITDA positive, but they're not profitable. Funds from operations, 39.1, which is why they do a dividend, because they do have FFO. And what else? Oh, debt. Yeah, they talk about debt. So drawn debt, $1.9 billion. So the market of the company is 1.4 billion. Property valuation, 4 billion. So drawn debt, 1.9. So we are talking about the enterprise value of this company being near the NVA, net as NAV. I think I haven't gone that in depth with the company because, yeah. Okay. Okay. So why is the share price down? Now, I don't follow this company much at all, and they just mentioned that they did beat their prospectus numbers, that sort of thing. I don't really care about the outlook, although sometimes the outlook can be important. When I say I don't really care about the outlook for this company, it's because they don't have any, for instance, they just mentioned financially 26 EBITDA growth will ultimately be dependent on the timing of new contract commencements, renewals, and remixing of existing capacity in the Australian business. So I found their outlook to be really wishy-washy. And I'm really happy to say that in Capital Brief, they also mentioned that really washy-washy outlook. And I don't think the market was liking that. Now, what else did Capital Brief say when it comes to Digico? See if I can find it here. Inaugural financial results. So this, one of the reasons, the first time I looked at this company. So E&P Capital Analysis said the result was a slight miss, but not far off expectations. However, he noted that it is complicated by the company's guidance approach, which has decided not to provide an actual range. Yes. So yeah, they mentioned then that quote. Okay, so share price down a fair bit. So let's have a look at the chart for Digico, wherever it's called. DGT? Where is it? There it is. No, that's not it. DGT is not coming up. I don't know what's happening there. That's definitely the wrong. DGT. I've got a DGT KOA. Maybe I could spell it. It's not up. It's not at all. Okay, I'm going to go to, this might be my REIT. There it is. I have no idea why it wasn't coming up on TradingView. So this is the daily chart for Digico. Yeah, so it listed back in 2024. I'm pretty sure this was spun out of HMC's at Home Capital. And it was sort of badly timed. Well, maybe not badly timed, but during most of the start of 2025, the data center space was sort of out of favor. And that's where the share price of this company dropped, and fairly volatile since then. Share price went from $2.40 back up to $4, then down again, then up. But if anything, you could probably say that this is in a downtrend. And a little bit of selling has come in today. So a little interest in Digico infrastructure for me. But an interesting first look at this company, this REIT. Okay, coming in number 3, we have O Media. All Media, share price down 10.06%. Okay, I'll be honest with you, I don't follow this company all too closely. Had a look at the media release and I went, it's not bad. So we're talking about growth of, where is it? Revenue. Oh, by the way, this is the half-year results. So revenue up 17%, underlying profit up 46%, interim dividend up 29%. And I was thinking, that's pretty good. But again, I don't follow this company too closely. I've already mentioned interim dividend. James Taylor expected to commence as CEO late 2025, early 2026. I'm pretty sure that is not the singer. I don't even know if the singer is still alive. Is the singer, James Taylor, the singer, is he alive? Yeah, he's still alive, 77 years old. So I'm pretty sure that is not the singer, James Taylor. Pretty common name, although I'd think James Taylor. So again, this is a company I don't really follow all that closely. They have advertising, particularly outside sort of thing. I think, what was it? Media stands for outdoors. Oh, I did once look it up. Media stands for out of home advertising. Out of home advertising. Yeah, so it's benches and train stations, stuff like that. Anyway, so I thought this was pretty good, but the share price is down 10%. So why? Obviously, you know what I could do? Obviously, the numbers did not meet expectations. Now, no, they didn't release anything on Morgan's. So let's see if they did. Obviously, the results did not meet expectations. Now, did they have any outlook? So, so there was an outlook here. Again, I don't know if this was better than expected or worse than expected, but when you do see the share price or the market react, sometimes you can tell this must have been a miss or the outlook was a little bit weak. And I do like to back that up just by looking at Capital Brief. This is my go-to now. Yeah, Media shares tumble on lower than expected earnings. So even though the numbers in isolation look pretty good, it was lower than expected, and that is all that matters. It doesn't matter if the numbers look good. And I do know a lot of new investors don't understand this. They don't understand. They see the numbers and they think, oh, what a great result. And then they see the share price drop 10%. They go, oh, the fix is in, it's manipulated. Oh, they blame everything except that they don't understand what drives the share price higher or lower when a company releases results. It's a miss. And I hope it makes sense why the share price should drop if it's a miss. Because the analysis have their expected numbers, they put it into their valuation machine, and it spits out a valuation. And now they have to change their model. They have to decrease the numbers, and it spits out a lower valuation number. Anyway, so reported EBITDA was higher than expected, blah, blah, blah. Okay, so UBS said EBITDA was a 2% miss to consensus, and the operational expenditure guidance range has been increased. Okay, so there's an increase in costs or spending. In fact, it's not a massive increase, but it's enough. Driven by higher employee incentives. And E&P Financial Group, outlook is solid but slightly lower than consensus, and given a slight miss to first year numbers, we'd expect the stock to underperform the market today. There you go. Absolutely spot on. And that just shows you that you do need a little bit of knowledge about how the market or what the market is expecting when a company releases results. Now, this was a little bit of a shock to me in terms of I thought, if anything, this would be a beat because the chart did look pretty good. Now, today could be a trend killer, but we have seen a little bit of buying coming in. This is a nice looking chart. Share price popped up on results in February. So today could be a trend killer, but I'm not sure. Okay, Kaili Resources up. Wow, 5,700. Oh, look at that. We're starting to see sellers coming in. Look at that. Sellers up to 11. And it's in a hold again. No, it's not in. I thought it was in a hold. No, it's not. It doesn't matter. It doesn't matter that there's a little bit more sellers because the enthusiasm of the buyers are still outwhelming the enthusiasm of the sellers by far. Interesting. Up 5,000. We could have doubled our money if we went all in when I started this video 42 minutes ago. Okay. Coming in number 2, we have a company I do own. And this was going to be in the top 5 stocks no matter what. But I'm very happy to see the share price up 11%. Yeah, so this was a really good result. I liked it. But again, I didn't have any expectations. But I was thinking, as I read through the results and I had a look at the valuation, I was like, is the market going to react really positive to these results? Because, yeah, the share price has run up. Okay, so let's have a look at there. Which one should we have a look at? Preliminary final report. So revenue up 10.6%, profit up 23.5%, and dividend, well, it's not sure that's up, but we can actually have a look at the presentation. Okay, so this company is a financial services company with fund management and all that sort of thing. I have no problem with how this company has performed. I've held this company for a long, long time. I've never had issues. In fact, I would describe this company as high quality. I'm not the biggest fan of what they do, but what they do it well. And that's why they've just, every single year they do well. It's just, in fact, I have this little chart here. And so from June, when they listed, maybe, so they have significantly outperformed the All Ords, up 1,948% compared to 275%. And they've got another one here if you like dividends. So if you invest in this company, your dividend yield on your initial investment in 2013 is now 44%. And it's just growing every single year. Oh, beautiful growth. So this is like the definition of a high-quality company. But I still don't think a lot of people have ever heard of Fiducian. Anyway, there was no any sort of outlook or anything. But yeah, what else can I say? Let's have a look at the chart. So yeah, I've held this company for a long, long time. It's still fairly small. We're talking about a company with a market cap of probably over $400 million now. Well, not quite, $395.86 million. So I bought this company when the markup was $100 odd million. Only 31.57 million shares on the issue. And I don't think it's going to change all that much. But the chart looks pretty good. Look at this. All-time high. Did I put in when I bought this? No. In fact, the weekly chart, look at this weekly chart. This is a chart of high quality. In fact, I put an uptrend line here. Look at that. If you put in the 200-week moving average, and yeah, so a couple of times it's fallen below that, and that's great buying. And in fact, the share price has more than doubled since the bottom. Okay, so again, I'm a little bit surprised the share price has increased, because even though I think these results were pretty good, I thought the valuation of the company might be a little bit too stretched, maybe. So I definitely personally would not be adding to my position with Fiducian Group. Okay, that's Fiducian Group coming in number 2. And stock of the day, I wish it was Fiducian Group, but I could ignore Audinate's share price down 20% on their results. And I'm not shocked with this one. I think I've mentioned that I think you can be a little bit patient with this one, because I didn't expect any good results this particular financial year, and it was all about any sort of outlook they did put out. And unfortunately, there was definitely one thing in the outlook I went, uh-oh. I don't think the market's going to like that. Now, I'm not sure if their numbers for the particular year were better or worse than expected. There was a nice little rebound in the second half of the year. So I think the bottom has been reached, and they're now maybe getting better. But there was a little bit of an outlook statement. Oh, here we go. Here's the half-year numbers. So nice little increase from the first half to the second half, but nowhere near what we saw in 2024. And gross margins have increased. That's a nice little thing. Gross margins have increased. But there was one little thing when it comes to their outlook, which I went, ugh. If I can find it here. Outlook. Okay. Okay. So in financial year 26, Audinate will invest in strategic opportunities with Iris, Dante Director, and the Dante platform. As a result of these investments, operating costs in financial year 26 are expected to increase by 25%. So that was the first little dinger. And then because of that, the company expects to report negative free cash flow in financial year 26, reflecting the purchase of Iris and planned strategic investments. Now, these strategic investments might lead to more significant growth after financial year 26. So there could be long-term benefits of these investments. But the market tends to be much shorter term than that. And I don't think the market liked that. In fact, I saw it and went, I don't think the market's going like that. And I think that's the main reason the share price is down 20%. And another reason in these sort of situations, I think it remains wise to be patient. Just wait for signs of a shift in sentiment and the trend in the share price. And if that happens on positive news instead of negative for this one, that could be a good thing. Now, I don't know if, I'm pretty sure there's mention of Audinate in this, in Capital Brief. Here we go. Audinate shares slump amid soft financial year 25 results. I'm not sure if it's financial year 25 results. Let's see what it says in here. Okay. UBS analysis flagged the cost reinvestment was larger than likely priced by market, even adjusting for IRS acquisition. So what they're saying here is the market did have expectations about the cost reinvestment, but it was more than what the market was thinking. The analysis also flagged that operating costs of about 50.5 million were higher than UBS expectations. And what I mentioned, 48.2. There you go. And analysis had expected EBITDA to be 2.7 million, while the consensus estimate, according to Visible Alpha, was 1.2 million. Oh, they're talking about this year, I think. So the EBITDA numbers this particular year might have been a little bit softer than reported. All right, so that's Audinate. So again, I think this is a case where patience can be a virtue. Maybe not with Kaili Resources. Share price now up 7,000%. Share price has gone from 4.1 cents to $2.55. If you had this sort of gain in a year, you'd be over the moon. If you had that sort of gain over 10 years, you'd probably be over the moon. This is one day. One day. It's just bananas what's happening. And the buying just doesn't stop. Let's have a look at the orders. We're getting more sellers coming in, but there's still just so much buying. Oh, it's insanity. All right, let's have a look at the chart for Audinate. Yeah, and this is another thing. Look at the chart. The chart is horrendous. The chart is horrendous. There's been any buy signal at all when it comes to the chart. Share price has dropped below $5. That has been an important level for me for a while, which goes all the way back to the lows back in 2022. So if it falls below that, we're talking about 5-year low for Audinate. But I think when everything turns around for this company, that is the time to get excited, because there is a lot of upside for this company moving forward over the next 5 to 10 years. Okay, onto the chart of the day. And this is, I think it's Aurum or something like that. AUE, Aurum Resources, yeah. I had a look at this the other day, and we're talking about cup and handle by Aurizon. And then I saw this. I think it was either late in the day or early on Sunday morning. And I went, oh, this looks like a cup and handle. So beautiful rounded cup. And share price got back to the top of the cup. And then we saw the share price pull back. And then on Friday, share price popped up above the top of the handle. And so that is the definition of a breakout. So Aurum Resources. I don't know anything about this company apart from this chart. The only thing I'd like to see, would have liked to see, is higher volume coming in on that breakout. Fairly low volume, but share price did pop up 8.65%. Okay, so that's the chart of the day. Aurum Resources, ticker AUE. And that is all I have for this video, except for one last look at Aurum. Up 7,400%. Wow. That is all I have for this video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.